Afternoon, you're watching Closing Trades on ET Now. I'm Anisha Jain, with me Zavan Dubash, and the color for the day is definitely red because that's how all the sectors are shaping up. That's how the Nifty has been since the start of the trading session. Yes, there's a definite recovery which is underway, almost 100 points off the lowest point of the trading session, but nonetheless we are just around the 16,930 mark, and we're not alone in that. It's completely the global mayhem which is having an impact on the Indian markets as well. The European markets have opened with a cut of anywhere between 0.5 to 1.5%. The futures in the US markets are showing deep shades of red. Remember, at one point of time, Dow futures had declined by as much as 400 points. It's now just around the 250 point cut mark. Stock 600, which is the banking index in the European region, has seen a deep cut of around 3%. Remember, with that deal happening between UBS as well as Credit Suisse, we have seen big reactions come in on those counters. In fact, Credit Suisse was down as much as 60% at the start of the trading session, and UBS also saw a cut of almost 10 to 15%. There's a risk off which is completely underway, and that's visible with what's happening to crude, a cut of almost 3%, just around that $71 per barrel mark. And remember, this is the lowest that we have seen since towards the end of 2021. And on the other hand, you had gold, which is sitting at record high levels. Not just that, the risk off is visible in the bond market as well, as the US 10-year yield has now hit a mark of 3.3. So a big correction happening as far as US 10-year yields is concerned as well. And as a result, our Nifty is at 5-month low, all sectors in the red.
Absolutely. So that's what we're looking at. It's not the color purple, it's the color red that's dominating the markets. And as you flagged off, even the broader markets are feeling the heat. So it clearly seems that all that global volatility has really soured the mood on D Street. It's nothing but pretty much mayhem this Monday afternoon that's playing out. Just want to run you through then some of the stocks that are in the spotlight in today's trading session, a few stocks that are reacting to news. So let's begin then by taking you through Cochin Shipyard. The company has bagged an order, a 550 crore rupee order that is, from Samskip Group. This is for 2 zero-emission feeder container vessels, and that's keeping the stock alive in today's trading session, up a solid 4%. Adani Enterprises, meantime, it's continuing to remain a huge drag in today's trade. The company has suspended the work on 34,900 crore worth of petrochemical projects. They're going to freeze a proposed 1 million ton green PVC project as well. And you're seeing the implications or the play out of the crude oil price fall to close to now $71 a barrel, working for some of the OMCs. So the likes of HPCL, BPCL and IOC, they're all abuzz in trade. A quick look at the volume buzzers as well. Balrampur Chini has seen a breakdown from the 4-session base support. It's actually slipped below its 50 DMA, seeing the biggest session decline in the last 4 months. There's Reliance Industries. We're continually monitoring that heavyweight, and the selling pressure has not abated as it's hit its 52-week low intraday, declining for 8 consecutive sessions. And Kaplan Point has snapped its 6-session streak of lower lows. Volumes as well quite heady there on that stock, close to 16 times the last 20-day average. So Kaplan Point at 640. Time to bring on board our guests. We've got Kunal Bothra and Naresh Mirani joining in on the fundamentals. Good to have on the technicals. Sorry, good to have you both on board. So Kunal, what is it that you're advising one do right now, given the fact that the broader markets are under pressure, the Nifty is down 160 points, and high beta pockets like metals as well are down and out? You had a hold rating on the Nifty, right, this morning?
Absolutely, and I think at current levels, I would probably look to even trade this or convert this into buy. I was flagging this in the morning that 17,000, 17,020 is a good zone on the index futures to go for a contra buy. Most of the indicators today, as well as the chart patterns, are indicators that the markets or the indices could probably have formed a decent base at the 16,800, 850 zone. So I think next leg of downtrend could probably only start once we break and close below the 16,800 mark. And I think till the time we trade above those levels, there could always be an expectation of a bounce. Now, the only change in terms of sectors which I'm liking today for the markets is that there are at least some defensives which are making a comeback. The likes of FMCG, pharma names, large cap pharma stocks, specifically these stocks are making a comeback for themselves. So that generally is an indication that at least the sharp correction or the volatile phase of the markets, that could probably get arrested if we see some stabilization in terms of individual sectors. So that is also one of the reasons why I would believe that we may head into a minor bounce on the indices. So 16,800 remains to be a stop loss. If we are till the time we trade above those levels, would maintain a hold on the index long positions.
Okay, hold with a slightly positive bias might just convert to a buy as well. Naresh, would you concur with the view? Is the poison out of the system?
So I think what we are seeing is the global volatility has been hitting us. So if you look at the whole day movement today, we started off with a downtick in European and US markets, recovered to the day high. We saw a little bit of a recovery, then a low again out there. We are now again setting a day's high for European markets, and we are seeing a recovery here. So this is a global, say, volatility period, and generally around the bottoms is when the volatility increases. So the view is 16,750, 16,800 holds. We open up for a big bounce. So at current levels, one can keep a closing stop loss of 16,800 and go long on the Nifty as well as stocks. So as of now, would focus more on the large caps. Once we start going above 17,200, that is where it confirms the short-term bottom is in place.
Okay, since we are talking about Reliance as well and the huge underperformance which is quite visible as far as the stock chart is concerned, because it hit a 52-week low today and has been forming a downward pattern as well. Let's go across to Somit to understand what are the fundamental factors which is plaguing that particular stock at the moment, though it's off the lowest point of the trading session. Somit, take it away.
If you see, it is the 8th consecutive day of fall, and now valuations are at April 2020 lows at around 17.6 times. Now do remember, the lowest point of valuation was in March 2020 when it was trading around 11.9 times, but currently it is at April 2020 lows. Now what are the concerns behind this fall in Reliance Industries? Firstly, it's the ongoing capex cycle. Now, in past instances also we have seen that whenever Reliance Industries is in the capex mode, the share prices of Reliance Industries have been languishing, and that is one of the reason. But what is different this time is also the fact that there is no much clarity among the investor community on what this capital expenditure has been done and what is the kind of returns that Reliance Industries is expecting going ahead when the capital expenditure is over. So that is one of the concern. The second is the fact that the company has been doing a capex and there has been a lot of acquisitions that have been announced by Reliance Industries. Now because of these two factors, if you see the company's net debt, it has again increased to around 1 lakh crore rupees. Now from being a net debt free company, the debt has is now standing at more than 1 lakh crore, and because of this and the rising interest rate cycle, the company's interest cost is also expected to eat on the net profits of the company. Now overall, if you see, there is a consumption slowdown that we are seeing, and this is going to impact the company's telecom and the retail business. Now both these businesses account for more than 50% of the SOTP valuation. Now when it comes to the O2C segment, the petrochemical segment margins are yet to recover, and this is despite the fact that China has reopened, and which was expected to be one of the key triggers for the petrochemical margins. Also the Singapore gross refining margins, they have been trended lower from $10 per barrel average that we had seen in the month of Jan. Now it's currently trading at around $7 to $8 per barrel. So that is one of the reason. Also analysts are expecting that because of the upcoming election period, there might not be a tariff hike in the near term very soon, and tariff hike is the most important factor for growth when it comes to the telecom business of Reliance Industries. And lastly, because of all these factors, the FY24 EPS cut is also expected. Currently analysts are expecting a 19% jump in the EPS, but because of the above mentioned factors and going forward, there could be some EPS cuts, and these are the mainly broadly the reasons why Reliance Industries has been lagging in trade.
Thanks very much, Somit, for giving us those details. So that's really what's ailing Reliance Industries at about 2196. Let's understand where to from here, Kunal, when it comes to the stock price of RIL. Chances of breaking the 2100 level as well on the downside?
Yeah, seems like. I think the stock trend is very, very fragile at current levels for Reliance Industries. You know, the stock had a very strong support at 2300, 2250 mark. It managed to absorb, 3 or 4, phases of strong market correction at those levels and then bounce back. One of the bounce backs actually took the stock back towards its 2700, 2750 mark, which was in 2022. But then this time around, the stock could not hold on to that 2250, 2300 support zone. So the pace of correction actually slowed down when the stock entered into that support territory, but then post the breakdown, the stock has not been able to see any kind of an intraday recovery as well. So that puts in a question mark that possibly the near-term trend seems to be broken. So till the time the stock doesn't trade back above the 2050 mark, I think we can just probably keep a wait and watch move on Reliance Industries, and we can watch out for whether the stock holds on to that 2100 mark, goes below those levels, or whether the indicators get into an oversold territory. So as of now, no trade on Reliance Industries, but only about 2250 mark is where I would believe that strong confirmation of a bottom in place for the stock.
Okay, so fragile, that's the word coming in for Reliance Industries as of now in a no trade zone, but watch out for that 2100 marker on Reliance Industries. But you know what? We are also watching out for 18,000 mark on the Nifty, and that's because Bank of America Securities has actually changed their Nifty year-end target and they've reduced it to 18,000 level versus 19,500. So a big cut coming in to a tune of almost 1,500 points reduction. Let's go across to Pankaj to understand what exactly is the rationale coming in from Amit Shah to cut this target on the Nifty. Pankaj, take it away. Pankaj? Pankaj? Okay, we'll try and reconnect with Pankaj in a bit, but what happened was with that Bank of America has actually cut the target on Nifty to now 18,000. They're expecting that the level is going to be 18,000 by the end of the year, and earlier they were working with a number of 19,500. They believe that buying on dips is a strategy that can work for you, but that should happen only at the level of around 16,000. So they're expecting that the Nifty might hit the level of 16,000, and that is where it becomes into the buying zone. They have lowered the Nifty range now to 16 to 18,000, and they are saying that probably for calendar year 23 be prepared for flat returns, so no double digit gains or even a high single digit gain is what they are penciling in. They are saying it's going to be a year of flat to very mild returns coming in. Post the 6% correction, the Nifty's valuation has become a bit more comfortable. It's close to the long-term average, but it's still overvalued when you compare it to the other emerging markets as well as debt. So on a relative basis between different asset classes, that is where Nifty is losing out, because in terms of its own history, it's very close to the long-term average, but versus other asset classes, it's losing out. And that's why for now, it's not a big thumbs up coming in from Bank of America. They are saying that 16,000 is the level where you should buy. Until then, they have a year-end target of around 18,000 on the Nifty as well. But with that, we'll slip into a very short break with the news that the markets are making a bit of a recovery. It's not as ugly as it was looking midday. We have managed to scale past 16,900 at the index level, though the Bank Nifty is a bit jittery, still down 400 points.
Welcome back. Still tuned into Closing Trades. It's a sea of red. We're sub the 17K mark quite decisively at that. The broader markets feeling the heat, and across the board, there are pockets of selling pressure. Let's connect then with Mehul Bhatt. He is the founder and chief investment officer at Oyster Rock Capital right here in our studios. Thank you so much for taking time out and joining in. We were talking about how the color of the day is clearly red, but despite that, you seem to be optimistic. Why is that?
Thanks for having me. I think two things at work here. One was that in the last few months, especially, markets have been quite expensive, and you had lots of companies that we had shortlisted but not getting the right price to buy at. I think that's changing now as we speak. And the second is, if you speak to people in corporate India, a lot of ideas around acquisitions or capex seem to be muted now. I think that also gives us hope that the returns in these underlying businesses will actually improve, and that in turn will produce better returns for investors like ourselves. So if you look 2, 3, 5 years out, which we tend to do, and we look for these anomalies in the market or idiosyncrasies where you can capture value, I think a lot more are emerging now than what we saw even a month ago or even 6 months back. And it just improves the odds for people like ourselves to actually invest.
The fair point taken, and you do invest in special situation kind of stocks, the
Right.
ones where value is mispriced at the moment.
That's right.
Let's put it like that. Which give us some instances or give us some of the stocks wherein you are seeing value, because right now I think in the last 10 days itself we have heard about many management changes, right from TCS, Tech Mahindra, HUL, and the list really goes on
Sure.
with ICICI Pru,
Sure.
etc. as well. Spot some names for us.
So I can't talk about individual names for compliance reasons, but if you look at financials, for example, what we've seen in the last 3 quarters, we've seen very good growth. So 3 years back, if you asked any of us, would either private or public sector financials see a 17% ROE in 2023, 2022 December, we would all have disagreed with you vehemently, and here we are. So, I think growth may be a little tepid compared to the first 9 months, but that pocket looks pretty interesting, and you have a lot of options to pick and choose from. So there are, banks which specialize in SME. There are some that specialize in, lending to a particular set of people. So you have a vast range of options to pick and choose from. And that seemed like an interesting pocket to hunt in depending on your preferences. The only issue or a little bit of a challenge is that there's probably a consensus that most people talk about financial investments, and I think you don't necessarily need to be contrarian all the time to actually make money. So I think that pocket looks interesting. Many of the infrastructure, though we don't really buy those names, but the allied sectors within that supply to infrastructure. So firms that make pumps, valves, tools. A lot of them look pretty interesting with the underlying capex story that's emerging. While the larger names in the capital goods space look expensive, there are many opportunities now, especially in the context of what's happened in the last few days, that look pretty interesting to us actually.
Okay. And as another theme that you guys look at in terms of finding value is a lot of these businesses in spin-offs and transition. What's the rationale for that?
So we've seen, and I think there's a lot of work done, and in the famous investor and author Joel Greenblatt also has done a lot of work on that. And these tend to create a lot of value as soon as one company spins off 2 or 3 businesses, each one gets listed separately. We've had so many instances in India in the past few years more so, where a business had some industrial, some consumer, and some B2B, where the consumer was spun off. They get a private equity guy in, runs it as a separate listed entity, and we've seen the underlying engine play out much better than when it was a part of a conglomerate business. So we feel pretty excited by those opportunities, and even as we speak, there are a few that are emerging which eventually will get spun off, and those tend to be low-hanging fruits for guys like us who look for these anomalies and these idiosyncrasies.
But it's a very something that you have to be a lot patient about, because
Yes.
for instance, for Reliance, we have been talking about the spin-off happening. It's been what, 2 to 3 years that it hasn't taken shape. Similarly with ITC, it's been much talked about. The hotel division will be spun off, but you don't know when that will happen.
Right.
But in any case, I want to come back to the point that you were talking about the financial space and PSU versus private. PSUs, apart from this year, wherein it hasn't been that great for them, over the last couple of years, they've returned what, 60-70% already?
Yes.
Still a buyer, and not just the key name of SBI, but the other smaller ones
Yeah,
too?
sure. I think a lot of them look pretty interesting because each one has a niche of its own. So someone specializes in, lending to truck, to CVs. Someone specializes in some other area of lending. So the gamut is pretty vast, and wherever one feels comfort about the opportunities that exist, I think whether it's a small finance bank or the smaller private banks. Or the larger public or private banks, I think the opportunity is across the spectrum in that space.
Okay, fair enough. What is it that you would advise investors to do then to hunt for those long-term compounders at a time like this? Like you said, there's still that silver lining despite the volatility that we're seeing. So what should be the approach right now?
So I think there are
because there is that nervousness in the market.
Sure, but there are different ways to bell the cat, right? I mean, it depends on your temperament. So what we do best is buy for a 3 to 5 year horizon and wait for these businesses to actually emerge or flower. And I think volatility is actually a friend for people like us who are looking for these opportunities. So, I mean, thinking about it, actually, such markets give you much better options as an investor as opposed to, bull markets where it's much harder and everything's going up every day. So our belief is that people who have a 3 to 5 year view, this is, I think, a much better time than any to actually, start, if you've not already started, to increase your investments in, especially names where you've done enough work, you've been waiting for the right price, and here you have those in many instances. At least this is a great start to our minds, for sure.
You're not helping us by giving us the names of those stocks, but at least tell us which is the area which is a complete no-go at the moment, which seems, let's say, bloated, inflated, or as you said, maybe much talked about consensus, etc., something which you wouldn't even touch with a long pole.
So you got to get approval from our compliance people for me to give you names, but
we always try our luck, don't
yeah,
we?
sure. But
it's our job. We've got you here.
sure. But I think interest rate sensitive businesses, whether it's in consumer discretionary or, classic would be a real estate and allied businesses, are places where I think it'll take a little longer. So, corporates, when we speak to them, interest rates exactly 12 months back in the US were 1%. Today they are 5 or 6%. And this is actual interest payouts by companies in India also. In India also, housing loans have gone up from 6.7, 6.8 to 9 plus today. And that's the case in the industry also. So I think that's a place where you're going to find it hard for companies to grow or to actually be able to defend their profitability. And we'll see a little bit of consumers also delaying decisions, especially in purchase of houses or in purchase of large ticket items where they're dependent on debt.
So discretionary might take a hit in terms of at least a very long, big ticket item, and the likes of real estate, etc., might come under pressure. Thank you, Mehul, for joining us today. Appreciate you
Yes.
being
Thanks
with
for
us
having
in
me.
the studio here. But for now, the market is not looking as bad as what it was looking, let's say, an hour ago. 16,931 is where we are at. The Bank Nifty is holding on with a cut of around 1.1%. You also have the broader markets, which are improved slightly because the market breadth seems to be improving at the moment. However, having said that, all the sectors are actually trading with quite a bit of red tinge. And today, Bajaj Finserv surprisingly is down and trade 4% cut coming in there, though HUL is the one which is up around 2.5%, and even ITC is shining bright, a 0.5% gain, and Nestle and Titan too. So FMCG having a bit of a positive tilt at the moment as well. But let's go across to Kunal to understand what happens when the markets correct by around 10%, because for now we have seen that the markets have corrected almost 10% from the top. Where do we go from here on, and how do the charts really stack up in terms of the history? Kunal, tell us more.
Thank you, Nisha, for that. So, you'll be surprised that in the last 20-25 years, there have been 23 occasions where the markets or the index, specifically the Nifty in this case, has corrected more than 10% from its previous, major swing highs. So, we've captured, few of the times when the indices have made, a correction of new lows of 10% from the previous highs. It starts off from 1995, goes back towards 2008, the deep correction for the markets, 2018, 20, 21. These were the three very recent corrections for the indices. We all know what happened in 2020 when the markets fell off sharply by more than, from I think 12,000 levels to almost 7,500. So more than 20% correction on the index. And most of the attempts where we've corrected by more than 10%, the market seems to have settled into a trading range, and there has been a continuation rally for the indices. It's only in the years of 2000, 2008 when the markets have seen an extension of more than 10% correction. In 2020 was also a similar case where the markets fell by more than 10%, fell by more than 20%, and then formed a major bottom. So generally we've seen that when the markets go into very slow, steady, gradual or a structured correction, the correction tends to halt somewhere around the 10% mark, forms a bottom, and then you see a continuation rally. So hopefully if there is no major negative news flow which comes by in the global markets as well as in our markets, then possibly the data may repeat and we may have temporarily formed a major bottom on the index.
Interesting. Thanks very much, Kunal, for putting all of that data into perspective. Let's shift gears then, and the government's residual stake in Balco will soon go for strategic sale. ET now has learned from sources that the Mines Ministry has asked the DIPAM to set a roadmap to sell the government's remaining 49% stake. My colleague Prakash Priyadarshi joins in with those details. Prakash?
Yes, talks of offloading government's residual stake in Balco has gathered momentum yet again. Sources are informing that the Mines Ministry has approached DIPAM for its view on a government's residual stake in Balco, that is Bharat Aluminum Company Limited. As you are aware that the government of India holds 49% in the company, and Vedanta Group owns 51% since 2001. Since then, no progress has been made to offload remaining government stake in the company. DIPAM has to decide on a roadmap for offloading remaining stake in the company going forward. Mines Ministry has approached DIPAM since this issue has been pending for several years. We are also given to understand that a divestment roadmap has been sought by the ministry to make a strategy for enhancing crucial mineral production in the country. As you are aware that the Balco is a very crucial company as far as aluminium production are concerned. It produces almost 20% of the total aluminium capacity in the country. Besides that, government's residual stake sale in Balco may also help to meet divestment target.
Okay, thank you, Prakash, for that. But one space which is definitely gaining momentum is the FMCG counters. Pull up HUL, pull up ITC, Nestle, even Godrej Consumers for that instance. They're all sitting at the highest point of the trading session. Naresh, your take, HUL, ITC?
I would be a little careful here because it's a one-day move in terms of defensive move as of now. So if you look at 2 days back, we had HUL actually break down a range of the last 10 days, and now we are back above the range. So overall seems like just a one-off move. We may get a lot of resistance around 25.50. On the other hand, ITC may look interesting because the longer-term trend is still positive here. It saw a big deal also happen last week on ETF, etc. So 370 could be a stop loss, and one could go long on ITC instead of HUL. A Godrej Consumer on the defensive side has given a breakout, and the stock has been consolidating for quite some time. So in FMCG pack, I would rather go with ITC and Godrej Consumer.
Okay, let's get the closing trades also out of the way. Kunal, what's your closing trade that you're executing?
So I think ITC and most of the FMCG stocks are looking quite attractive. ITC is the stock which I would look to buy. The stock has also corrected from 394.95 to almost 370 thereabouts. So chart patterns, the price wise also looks very attractive, and that's the stock which I would look to buy.
All right, ITC it is. What about you, Naresh? Let's get in your closing trade.
So that would be L&T. The stock has been shaping up nicely, making a good base around 2100, expecting it to eventually break out once the markets recover a bit. So at 2160, 65, this looks an interesting bet.
Okay, slipping into a very short break, but don't go anywhere. We'll track the last 30 minutes of the trading session when we come back.
Thanks for staying on with us. This is Closing Trades. Just about a half an hour to go, and looks like it's status quo on the index. Although those attempts to pull back are evident in the markets, we're still deep in the red. So 133 points off on the Nifty at 16,967. This, mind you, after Friday's pullback session, largely owing to the kind of handover that we have from Wall Street, as well as what the SGX had indicated. It's broader markets too that are in the throes of the red. And you've got Balrampur Chini, Ujjivan, HAL, Piramal Enterprises, along with Max Financial Services and a whole of other stocks that are down and out. Sudeep Bandopadhyay is with us right now on the show. And Sudeep, good afternoon. Let's get in your take then as to how one should really be approaching some of those large cap names, for instance, Reliance Industries, those that have had a bit of a fall right now. Do you believe that it's a good time to pick up positions in these names?
Well, I think situation is extremely fluid, and there's a prevailing sense of fear in the markets. May not be as much in Indian markets, but definitely in the global markets. With what's happening with the banks, yes, the central banks as well as the governments are trying to contain the damage. But this fear psychosis is definitely the worst thing possible to happen for capital markets and financial markets in general. The real problem may not be as big as what is normally envisaged when this kind of environment of fear engulfs everything else. And till the time this persists, I think it's extremely difficult to predict what's going to happen in the next few days or weeks or even months. I think first we have to see things settling down before we can start recommending buy. Of course, there are opportunities in Indian markets. Fundamentally nothing really has changed, and we reasonably, with reasonable confidence, believe that Indian banking system doesn't have any issues, and there won't be any unforeseen shocks as far as Indian banking system is concerned. But yes, the sentiments are terrible, and we are seeing IT and BFSI getting beaten down really hard globally as well as in India. As far as the companies like Reliance is concerned, there are challenges on the oil and gas business because of global oil prices coming down, refining margins coming down, and marketing option not being with Reliance, considering the price at which petroleum and diesel retails in India. I think that business under the circumstances is a bit of a challenging. Also, the telecom ARPUs not going up, and telecom price wars restarting doesn't augur well for the PNL for the Geo segment. But these are short-term issues. Medium to long-term, I think it's a good script to buy at current levels. But whether one should buy today or wait for things to stabilize, my vote will be for things to stabilize.
So timing is something that you need to decide as far as Reliance is concerned, but fundamentally speaking, it's not looking too bad. That's a word coming in from Sudeep. So stocks may not be shining at the moment, but one space which is definitely shining is gold, because that is sitting at record high level. In fact, on MCX as well, we saw the gold prices surpass the level of 60,000, and that is the risk of rally that we were talking about, because you also had the US 10-year yields slipping to the level of 3.30. Yes, they have recovered a tad bit. That's because if you look at the equities as well, the Dow futures, which were at one point of time down 400 points, is now down just around 150 points. So there is a bit of a recovery happening in the terms of the sentiment globally, but gold is something that we're definitely watching out for. In fact, let's go across to my colleague Sharad, if we can, to try and understand what are the factors which are playing out for gold, because we have seen quite a bit of recovery already. And Kunal, we were talking about this, that it looks like that even after the solid run-up that we have seen this year, there are high levels coming.
Yeah, there are high levels coming for gold, and on the dollar terms, the gold has not yet come very close towards its life highs. I think 2086 or 88 is the life high in dollar levels for gold. We are almost $100 lower from those levels. At least till yesterday, 1986, 85 is where I'd seen last time the gold prices in. So which means that we are still almost 5% away from the life high levels for gold in terms of dollar. Now, if that rally gets replicated into our markets, we can expect at least another 2,000 to 3,000 points rally on gold prices in rupee terms as well, and that could probably take the gold prices towards not just the life highs of 60,000 plus, but even more beyond that. So bullish on gold over the near term, and expecting at least another 2,500 to 3,000 points rally beyond the 60,000 mark.
Sudeep, while it's a small cluster, chemical stocks and chemical companies have been in focus. In fact, some recent data indicates that they have announced a slew of capex plans across the board. While there aren't too many listed players, is there anything within this space that catches your eye?
Well, I like this entire chemicals and specialty chemical space, and we've been liking it for some time. The recent correction we have seen, I mean, I'm not talking about last few days, but over the last 6 months, we have seen specialty chemicals space and even chemicals get corrected to an extent. Post that, it becomes much more attractive from a medium to long-term perspective. The rationale for investing in these stocks haven't changed. I think the China plus one strategy for global OEMs, I think, is on an accelerator, and demand for Indian manufacturing of chemicals and specialty chemicals is only increasing. So, well-managed and efficient chemical manufacturers based in India are definitely going to be the darlings for the world manufacturing scenario. Under the circumstances, I think this is one sector which will definitely do well. Of course, we'll have to wait for this turbulence and this mayhem to stop in the market to really, start buying. But it's worth watching this space and buying. I like specifically, I like Aarti Industries. I like Nosil. These are the scripts which I think can be picked up at current levels.
Okay, so that's about the chemical companies, the space that Sudeep likes. But auto stocks have been on the downtrend for the last 7 weeks. In fact, the Nifty Auto Index has been in the red for the last 7 weeks, and right now as well, it's languishing in the red. Not the possible reason perhaps, but one of the sentiment impact on the entire sector is the fact that the prices for the entire sector might go up on account of some of the regulatory changes that are anticipated. Let's go across to Shrishti to understand it better of what these changes are and what could be the potential impact on the prices and hence the demand. Shrishti.
Okay, so as we know that the BS6 transmission in India was done back in 2020, but the second phase of the implementation, that is the real driving emission norms, that will kick in this April 1st, 2023, almost 10 days from now, and that is going to have a likely impact on the customers as the prices of the vehicles segment-wise are expected to increase. Just to give you a perspective, this particular norm ensures that the car deliver low emission in the real driving condition, and for that, the vehicles are mandated to fit a diagnostic kit into their device, and that of course is going to cost you. What these manufacturers have done is that they have already tried to partially pass on the price hikes to all their customers, but going ahead there are more price hikes likely. So let's shift focus to what the segment wise expectation is. Firstly, let's talk about the bifurcation of the engine types. Interestingly, a point to note is that the diesel variant is expected to get impacted more in comparison to the other gasoline segments. The ideal cost impact of RDE is 15 to 20,000 for a gasoline car. I'm talking about the car segment, but for the diesel car, the impact is expected to be 65,000 to 75,000. Coming to the whole passenger vehicle segment, a price hikes of around 2 to 4% is expected. In commercial vehicle segment, a similar price hike is what we are expecting, and for the two-wheeler segment, the entry level is expected to see a price hike of approximately 2,500. So that is the segment-wise expectation. Almost 10 days from now, these emission norms will kick in, and then we can see all these companies coming up with their price hike announcement. But for now, Tata Motors says that they have already upgraded their PV segment ahead of the timeline, and they have also partially passed on the price hikes. For M&M, they are ready for next 10 days, and they will be ready with all norms and all set of conditions to be agreed with. They will increase the prices is what they are indicating, and for Maruti Suzuki, the price hike will depend model wise, and in times ahead we're going to be seeing and watching that. But for 10 days from now, automobile industry is almost ready to get these norms in place. Back to you,
Shrishti, for giving us all of those details. Those are some of those auto companies in focus. Sudeep, wanted to get in your take basis the data points.
Well, I think, as your colleague was mentioning, this was announced long back, and I think most auto companies are ready with the necessary modifications, and that transition should not be a problem. Yes, there will be a marginal impact on cost, but I think the industry has bigger issues which they face, and that those predominantly are in the area of demand. And with what's happening in Europe as well as US, I think overall demand scenario may get impacted. We also have the challenges in China, though Chinese data till now is good, has been good, and JLR particularly gets impacted if the Chinese demand comes down. So we'll have to wait and watch how things move as far as global banking crisis as well as global economic growth is concerned before we can take a clear call on the automobile sector. As far as specifically Indian auto companies are concerned, we do like Mahindra and Mahindra with the pickup in SUV segment in a significant manner, and also the tractor segment doing exceedingly well. We of course have to keep in mind the local factors, which is the El Nino impact on Indian agriculture during the next fiscal or not. We also have to look at the EV transition and launch of EV vehicles for Indian automobile manufacturers. Those are the things to watch, but at current valuation, current level, we do like Mahindra and Mahindra.
Mahindra and Mahindra is one of the stocks that you like from the entire auto pack. Just flagging off some of the counters which are buzzing in the trading session. Balrampur Chini is down about 7% as we flagged off earlier. Ujjivan is down 6%. HAL, which has ex-dividend adjustment, is also down about 5.5%. And then you have names like IRB Infrastructure and India Cements, which are seeing quite a bit of pressure in the trading session. On the gaining side, let's pull up Aarti Drugs. I don't know what's happening in the counter, but that's suddenly showing an uptick of around 19%. Yes, so Aarti Drugs is something that is definitely buzzing, and Network 18.2 is higher by around 13%. Not just that, you also have Root Mobile, which is higher by around 5% in the trading session. Naresh, your take on for some of these buzzers, Aarti Drugs, Cochin Shipyard, Root Mobile, would you look at buying any of these names?
So Aarti Drugs has been correcting a lot over the last 1 year, almost down more than 50%. So it looks like a one-day tick. The only case which it becomes interesting is the fact that it is seeing a 10x volume jump up. But after a 20% uptick, it becomes difficult. Cochin Shipyard is the one I would go for, because that is a sector which has done well structurally, and then a good correction has also taken place. So Cochin Shipyard went up from 300, 350 all the way to almost closer to 700, and has corrected back to 440s. I think a short-term bottom is done here, and from 440 it could slowly and steadily go towards the 550, 600 mark. So as a medium-term bet, I would go with Cochin Shipyard at current levels.
fact, my colleague Nikunj also had a word with Ravi Dharamshi of ValueQuest Investments earlier. Let's listen into a slice of that conversation.
I strongly do believe that India is at an inflection point. We were calling our conference a VQ Inflection Day, but that is about inflection is in India. Inflection was for us also personally. Of course, we have grown a lot in the last 2-3 years. But from India's point of view, see, India is going from being a $3 trillion economy to 5 and 10 eventually over the next 6, 7, 8 years. And when that is going to happen, it is going to kick in a big consumption J curve. The discretionary spends are going to go through the roof. Surely we are facing some shorter term headwinds. So I'm not going to talk about 1-2 quarter view over here. We are talking about, see, India has managed COVID well. And this management is not only limited to the health crisis. I'm talking about the fiscal crisis or humanitarian crisis. All was managed well. Because of our better fiscal management during the COVID period, is that we are not in the kind of trouble that the global, most of the developed economies are. They've overstimulated the economy and they are having inflation that they haven't seen in few generations. While we have always dealt with slightly higher inflation, and for us it is pretty much par for the course. So if you, it is reflecting in the market performance as well. For us it has been a mild correction or consolidation over the last 15-16 months. It's not been like a crash. If you talk about the crypto or the tech or the bond market worldwide, there has been a lot of wealth erosion. India has managed to retain its wealth. The moment this crisis abates, I don't know when that will happen, India should actually start growing again. A lot of the FII selling today, I believe, is a result of pain elsewhere. It is not, the financial sector in India is one of the cleanest. They are witnessing a very high growth, and that growth is only going to pick up from here. So I strongly believe from all point of view, from politics, geopolitics, the management of economy, everything, India is positioned to take off from here.
All right, let's get a move on then and focus in on those OMCs in trade. Naresh, wanted to get in a view as to what your outlook is. Largely on the back of the fall in crude oil prices, you're seeing some of these names rally smartly in trade. Anything that stands out?
So a lot of these names have already moved up quite a bit. IOC is the one which has relatively moved lesser, but technically is shaping up for a bigger breakout eventually above 84. And it's gone into a sideways consolidation for a really long period of time, and it could be a big breakout here, a re-rating on the longer term charts. And we are seeing the whole PSE basket also do well. And say once the crude is taking that downtick, there's a good possibility IOC, BPCL, HPCL do well. BPCL has already come close to a 3-month high. So I would go with IOC at current prices. That is where the upside could still be there in terms of risk reward.
Is the top bet as far as OMCs are concerned. Kunal, wanted your take regarding a couple of these stocks which are trading at all-time high levels. KPIT Tech has had a solid run this year already, and even Blue Star is trading higher and is at life high levels. Do you see further upside or maybe time to book profits?
But Blue Star, I think, good time to book profits. But I think KPIT Tech is something which is the, I initially, probably preempted that this could be just a one-off move for KPIT Tech. But the way the stock has rallied, I think went to a correction just about 2 weeks back, almost 5-7% correction for KPIT Tech, and from there the stock made a new high for itself. I think that's a very strong indicator that the stock has come back after a phase of strong rally, consolidation, correction, and then a new high for itself. Those are the kind of characteristics which tend to sustain for stock prices, and this is coming at a point, more importantly, where most of the large cap IT stocks and the Nifty IT index itself is struggling to even hold up and give strong price performance. So I think that's an indication that KPIT Tech looks very strong, and I think that's, you should always look out for such kind of momentum names and try to ride on to the rally for these stocks. So KPIT Tech I would be bullish on specifically.
Okay, find out those BTST trades as well from our charters then. And Naresh, just about touch and go with that 17K mark, your BTST trade?
So would focus on the large caps, the heavies, which have been showing some sort of resilience or say oversold nature. First is the buy on HDFC Bank, recovering from that 1530-40 mark, could see a quick bounce back. A stop loss at 1540 and a target price of 1590. Second is the buy on Infosys, which has corrected from 1600, 1650 all the way down to 1400. seems like a good point of support here. Could bounce back to 1450 as stop loss at 1380.
What about you, Kunal? What are the BTSC trades that you are spotting?
So a couple of buy calls which I would want to initiate. First is the one ITC, flagged off the stock earlier, that the stock forming a good base as well as a bottom around this 360-65 mark. So keeping 360 as a stop loss, would look out for now targets above the previous major highs of 394. So 400 could be a target for ITC. So good risk reward even from current levels. And the second would be a buy in Titan. With gold prices rising, I believe that this stock has also gained some decent momentum in the last 1 week. It's holding on to those high levels of 2,450 plus over the last couple of days. So keeping 2450 as a stop loss, buy on Titan 2550 as an immediate target.
Kunal, Aarti Drugs, just purely going by the kind of price action that we're seeing from 361, where to?
Yeah, I think tough one because for the last so many days as well as weeks, the stock had been just correcting very sharply. So I believe that this could be a more of a one-off move for the stock price. I'm not sure if there's any kind of a news flow for the stock, but then looking at the data, it seems like maybe the stock could probably fizzle out tomorrow or day after.
Okay, Sudeep, wanted your take with respect to what are the top stock ideas that you are working with at this point of time? Any particular sector or stocks that you want to highlight that look interesting?
Well, it's a very challenging time to buy stocks, but if somebody is willing to look at a 1 year kind of a time horizon, I think we will stick to the construction infrastructure space where it's a completely domestic focused sector, and Government of India's capital expenditure plan announced in the budget is very much there for all of us to see. So these are the companies which are going to benefit, and the leader of the pack, Larsen & Toubro, after all the correction and all that, does look really attractive. Apart from the tailwind which I talked about, the company itself has also done quite a bit to clean up its act, I would say, by getting rid of unrelated diversification, not mainstream assets, managing working capital much better. So the return ratios are also sharply improving. With execution improving, we would expect the stock to trade at significantly higher levels. So investor can definitely buy with a 1 year time horizon at current levels.
Interesting as far as the market setup is concerned, because now we are suddenly at 17,000 mark. So we have made a solid recovery of almost 180, 170 points from the lowest point of the trading session. And look at that solid recovery which we have seen in the last 1 hour. I think it's largely led by Reliance because that's now past the level of 2200. So it's showing a cut of just around 0.7%. So there has been a bit of recovery there. And separately, as we pointed out, FMCG is playing its part today. So HUL, ITC are the two top performing, index stocks, and Kotak Mahindra Bank too is up around 0.4%, contributing mildly to the upside on the Nifty. So a bit of a recovery is what we are witnessing at this point of time. Kunal, would your view on the index change with the kind of recovery or the buying momentum that we are seeing right now?
In fact, I was discussing this in the start of the show that we are expecting a recovery if the index holds above that 16,800 mark. It's always prudent to maintain long positions on the indices. So go short only below 16,800 mark. That's what I would believe, because that would probably lead to a strong structural close as well as a breakdown for the indices. So till the time we hold above that 16,800 mark, I think traders should hold on to the long positions. More importantly, Nisha, today is the first day where over the last at least 1 or 2 weeks that we've seen some fight back coming back into some defensive sectors. Till earlier, even the FMCG stocks were going into a correction. The pharma stocks were correcting very sharply. So, and Reliance Industries was, of course, one of the other large cap names which was also bleeding quite heavily. So, I think with these large cap names, defensive sectors coming back, it's just going to add more to the stability for the indices.
Okay, moving on. Yes, indeed, it is those defensives. They're the spot of green, HUL, for instance, or you've got an ITC, Colgate, Nestle. Those are some of the stocks that are doing quite well. Let's get in a view on the charts, Naresh, of Piramal Enterprises as well as Bajaj Finserv, top drags on the Nifty 100.
So Piramal Enterprises has been in a one-way downtrend for the last 1 month, and also from the whole delisting time. Technically, it's too early to call a bottom. It had come very close to, say, a breakout about 900, 920. Could not do that. So in this case, would still be an avoid. So not taking a view here. Bajaj Finance is something which is on radar, purely for the fact that the recent low was around that 5,500 mark, 5,600 mark. Today also it's come very close to that. So if it can reverse from here, it's a risk reward trade. But I would wait for a move above 5800 to confirm a reversal. But on this stock is on radar for a recovery.
Okay, but the other big event that the market is watching out for is the Fed meeting, which starts tomorrow. We'll of course get to know the outcome of it only come Wednesday night, but nonetheless the street is watching out for that big event happening because this is the first meeting since the collapse of the Silicon Valley Bank or the Signature Bank in the US. So the commentary around that will be really important to watch out for, and this is the first time also since the Credit Suisse deal has been signed that the Fed would be speaking. And also rates are at a very inflection point because a large part of the street believed till a couple of months ago that probably it will be a pause now. But given the way that data has been stronger and the commentary that we got from Jay Powell on March 7th in that Senate Parliamentary Committee meeting, that suggested that perhaps there's more upside coming. So that will be crucial to watch. No consensus on the street, Avan, as far as what kind of, hike will come in. There is a wide range of people believing there would be a status quo to the tune of around 40% people believing that, to 25 basis point hike coming in. That's what 60% of the people believe, but very iffy at the moment. We have already seen, 8 to 9 rate hikes already, but let's see what happens come Wednesday evening. But for now, the market is a bit nervous ahead of that big event.
Absolutely, and it's not the only thing that the street will be watching out for. Of course, it is the biggest in terms of what the event schedule is going to be. But yeah, it's an eventful week for central banks. You've got Brazil, Bank of England, Taiwan, Norway, Turkey, just to mention a few. Okay, a minute and a half to go, so let's wrap it up then. And okay, on the brink of 17,000, so we're just about holding on to that mark by the skin of our teeth. It's still down 0.5%. The Sensex has recovered, but still down 293 points. Ditto when it comes to the broader markets. That breadth, though, firmly skewed in favor of the losing side. FMCG, your only saving grace, so perhaps there is a little bit of hope, but had it not been for this, it would have been sub the 17K mark. Metals, though, beaten out of shape. PSU Bank's crack, IT under pressure, auto, you name it, all of the other sectors feel the heat. Let's take you through the big losers in trade then, and at the top of the heap is Bajaj Finserv, 4% shaved off. Adani Enterprises, Hindalco, Tata Steel, Bajaj Finance, Tata Motors at about 410. There's HCL Technologies and Tech Mahindra within IT along with Infi. Maruti Suzuki is at 82.32 and Cipla as well in the red. A handful of stocks hold out, and yes, that defensive tilt evident. So HUL, ITC, you've got GV's Lab. Those are some of the stocks that make it to the winners list. And then the OMC is largely owing to the way the crude oil prices have shaped up, around $71 a barrel. To the broader markets then, Berhampur Chini feels the heat, HAL cracks, India Cement, Adani Total, MRPL, Piramal Enterprises, Max Financial, M&M Finance down and out, and you've got Aarti Drugs, pretty spectacular move. Want to do a double take on that one, especially on a day like today. 20% rally. Rallis India as well, it's 5%. Sudarshan Chemicals, MMTC, Grindwell Norton, along with Rail Vikas Nigam. Well, hectic week for the central banks. For now, we wrap up at 17K. Thanks so much for watching from the team that put the closing trade show together.